All right, so today we're looking at the auditor's report, and I'll be quite fast, but in a way, ladies and gentlemen, you will be able to understand. So here I am, I'm talking about auditor's reports. So auditor's reports, this is what you're supposed to know. The moment you know what I have here, you've already known everything. So the purpose of the audit, remember the purpose of the audit is to issue an opinion. While we go auditing, at the end of the day, for example, like from tomorrow, my team will be in Kisii. Some of my team have some project in Kisii, one of the tea factories. So when they go there, they are going to collect evidence relating to how the financial statements numbers have been built up. So they collect this evidence. Using this evidence, then they should be able to give an opinion as to whether the financial statement numbers given there, do they show a true and a fair view? Do they show a true and a fair view? So the aim of the audit is to be able to report to the members on whether or not the financial statements present fairly the company's position and the performance. All the planning, evaluation of internal control and substantive procedures were carried out for this purpose. The auditor's report was discussed here, but here we are revisiting it. Remember those old, we have done so much in this paper. So the outcome of the audit process, there are two sources of difficulty. We have material misstatements or errors, and then we have here lack of sufficient appropriate audit evidence. Now, ladies and gentlemen, we have two difficult areas. It is either you go and find that the financial statements are materially erroneous, they are materially misstated, or in this case here, you go like most of these funny people. We experience a lot as auditors. You go to some CDF office, I will not mention. Yeah, you know, nowadays the OAG, Office of the Auditor General, they are now giving, they are subcontracting some of these public-owned enterprises, government-owned enterprises to private audit firms. So you go, for example, to a particular CDF. So when you are there, those guys would want really to be friendly with you. But at the end of the day, you realize when you start, in this case, and pressing them a little bit, that I would want to see this and this and this. What do? They tell you that the accounts office got burnt down last month, the whole of it. So there is no evidence. There is no way you'll be able, ladies and gentlemen, to get sufficient appropriate evidence in that case. So you've got two major difficulties. We have situations where the financial statement here will be materially misstated, and then we may lack this evidence. So we start with the first report, first opinion, unmodified audit opinion. So under unmodified audit opinion, neither of these difficulties has arisen, neither. So here, ladies and gentlemen, the financial statements are fairly presented. There are no material misstatements. And this company was very supportive. They gave me all the information that I needed to be able to form an opinion as an auditor. So remember, unmodified audit opinion is also known as unqualified audit opinion. Under unqualified audit opinion, we are saying, we as auditors, that the financial statements of RCM Limited portray a true and a fair view as pertains to what here? As pertains to the position statement and the performance statement, and of course, any other metrics under the annual reports. So under unqualified opinion, tunasema hakuna dosari. Kumbuka qualification ndio dosari. Under unqualified opinion, we are saying, ladies and gentlemen, that everything we as auditors, as you gathered evidence, everything here is really okay. From there now we go to what we call qualified audit opinion. So in this case here, under qualified audit opinion, one or both. Yeah, one or both has arisen. The problem is material, but not pervasive. So the problem can be isolated. The financial statements present fairly in all material respects, except for. So remember, ladies and gentlemen, whenever we talk of qualified audit opinion or except for, what are we saying? We have come to audit RCM. We are our own company, CPAs, auditing RCM books of accounts, auditing RCM's financial statements. And then now, ladies and gentlemen, as we look at, for example, the income statement to show the performance, we realize revenue is correct, materially correct. We have in this case here cost of sales, okay. Administration costs, okay. We have distribution costs, okay. Tax, okay. The only thing that has a problem is depreciation figure. So then as an auditor, what am I supposed to do? First of all, remember, ladies and gentlemen, we are not in the business of issuing qualified or adverse or even disclaimers. We don't have that intention as auditors. Whenever you see us giving a qualified opinion, or what we shall be calling an adverse opinion, a disclaimer opinion, then automatically you as our client has really pushed us to the very periphery. You've really placed us in between a hard place and a rock. You've got no place to turn, because ideally, I should be able to turn a little bit and tell you, hey, please, we have this depreciation figure which is wrong. And we have looked at all the IFRSs, and I mean, we are working within the ISAs. Please go and change this. Please change this. And we tell you why we want you to change. And even before I ask you to amend your financial statements, I must also make sure that I'm really, really correct in my approach. So then the moment in this case here now we disagree totally, then there will be an implication of this error in my audit opinion. So what I will do, remember, most of the things are correct. So I will simply come and say that the financial statements of RCM portray a true and fair view, except for depreciation that has been misstated by Kenya shillings 10 million. 10 million. So that one we call it what here? An except for qualification. So we only do that whenever the items misstated can be isolated, can be isolated. Ladies and gentlemen, and this happens often. When we came in this case here to audit RCM, people here, our clients have been very supportive. They've allowed us to do so many great things here to be able to get appropriate, sufficient audit evidence. But there is this one situation, which in this case here, I mean, we tried really so much, but we could not penetrate. But because they were very, very cooperative in the other matters, then it can only be good. If in this case here, of course, as I've told you, ladies and gentlemen, remember, as an auditor, when you give a qualified opinion, there will be a big impact in terms of how stakeholders handle this organization, how they deal with this organization. Most of the times, if you give a qualified opinion, if you give a disclaimer of opinion, if you give a bad adverse opinion, most of the times that company may die. So you don't want to be morticians. We don't want to be the ones in this case here who are basically welcoming you into this other world. So then, first of all, before I offer, I've seen people great. Yeah, I've seen people in this case here who always think like it's about just, no. We are in these organizations to ensure through the management letters we shall be able to give, we shall be able to improve controls, and then even firms flourish. So if we give a bad opinion, two things. Our relationship will never be the same. That's number one. You're not helping them. Actually, you are killing them. That's number two. I mean, do you think you'll even be paid audit fees when you give a bad opinion? Do you think you'll be paid audit fees? No. Now, of course, you should not really protect your audit fees in a way that you also keep on giving good opinions. But please remember, ladies and gentlemen, as auditors, we are being called into these organizations to improve things, to help these people strengthen their internal control systems. So assuming in this case here, Yeah, if they push you to the very end, then you will not have really any other option other than giving a bad opinion, if they really push you. But with my experience, what I've realized, when we sit down with these directors, you tell them, I mean, when you guys are doing like this, you are spoiling for yourselves. All right. You are understating depreciation. You are doing this and this. At the end of the day, you are creating this organization for posterity, for your children. Just do things right. If it is tax you're not paying, let's put things right because your risk is really very, very high. All right. So then if they agree, if you speak to them so kindly, most of the times they will make changes. Remember, as an auditor, you will come and tell them at the end of the day that this is a schedule of misstatements. So under this schedule of misstatements, there are those minor ones that you don't even expect them to adjust. But any material, depending on how you've set your materiality thresholds, those ones you must ask them to do what you're to amend. In most cases, when they hear that you want to give a bad opinion because of a lack of amendment, they will amend. They will amend. All right. Now, please listen. Let's get into this now. So here we are. We are talking about adverse opinion. So now adverse opinion is so interesting. I've come to audit RCM, and then I realize, ladies and gentlemen, that sales is wrong, cost of sales is wrong, depreciation is wrong, administrative expenses are wrong. Can I really say that the financial statements of RCM portray a true and a fair view, except revenue, except cost of sales, except administrative expenses are wrong, except I will be called auditor, Mr. Except for. When those misstatements are so many, we say that they are material and pervasive. They are material and pervasive. If that happens, ladies and gentlemen, then automatically you issue an adverse opinion. And in an adverse opinion, you're simply saying that the financial statements of RCM do not, now all of them, you disqualify all of them. The financial statements of RCM do not portray a true and a fair view. Then we have a disclaimer of opinion, like the example of the CDF I was giving. These people have been able to tell you that straight away their accounts department got burnt down last year. Then I'm not able to collect any evidence. If I'm not able to collect any evidence, it will be wrong for me to say adverse that they don't present. It will be wrong for me to give any opinion. So in that case here, I issue a disclaimer of opinion. Yeah, there is no evidence totally. No evidence totally. No evidence totally. So a lack of sufficient appropriate audit evidence that is so serious as to be pervasive so that the auditor cannot form an opinion on the financial statements as a whole. Those students are able to understand very well. Where students now go wrong is in these ones here. Remember also that there can be additions to the auditor's report that do not affect the opinion. These are material uncertainty relating to going concern. So, ladies and gentlemen, assuming there is a going concern issue, the directors have been able to pick, and they're saying that they can't use RCM as an example. Let me use XYZ. Yeah, words have got power. So in this case here, we are the directors of XYZ Limited. And we feel that this company will not be there from next year. Then what are we supposed to do? We are supposed to prepare our books of accounts on breakup basis. So breakup basis, ladies and gentlemen, is basically where we call upon market valuation. That if we break today, so we have market values, this table will sell this table this much. So instead of using the cost model for your PPE, where you're taking cost minus depreciation, now you rub all those previous financial statements, now you're putting market values. Should I go onto a forced sale? How much will I realize? So if the directors have known that they have a material uncertainty regarding their going concern, and they have prepared their books of accounts using breakup basis, and they have done adequate disclosure in the notes of the account, they're saying we have a problem. That is why we have prepared our books on breakup basis. Then as an auditor, what is my role there? What opinion will I give? Remember, they have followed IFRSs. They have used, in this case here, breakup valuation model, and they have done proper disclosure. So then, ladies and gentlemen, as an auditor, I will give an modified audit opinion. I will give what we call unqualified audit opinion, that the financial statements of XYZ portray a true and a fair view. But now I must come very fast and introduce a very important paragraph, a new paragraph, which in this case is titled MURGC. MURGC, material uncertainty relating to going concern. I should share this. So we have here material uncertainty relating to going concern. So this draws attention to material uncertainty that has been adequately disclosed. Please listen, because this confuses many students. There are many students who call us after results are out regarding this audit and assurance, regarding advanced audit and assurance. They tell us, Mwalimu, when I was doing this paper, I thought the results would be like this. But now they have come. What is not happening? And Mwalimu, I'm very good in English, and I wrote so much in that paper. It's because students don't take enough time to understand this paper. Ladies and gentlemen, remember, if, for example, the directors have known that there is a going concern challenge, but in this case here they say, hey, I'm going to prepare my financial statements as if everything is normal on going concern basis now. Going concerns, they don't prepare their books on breakup basis. They prepare their books, for example, using the cost model if it's PPE depreciating, like, because they are continuing in business. So from what you are able to see, you have been able to get, for example, onto their debenture deeds. You've been able to analyze their bank statements. You are seeing that these guys are not even able to pay up their loans. You are seeing the rate at which their overdrafts are growing. You can really see that this is a company whose rope on their neck is tightening by the day. So discuss with them. I can see a going concern challenge. You guys may not be able to continue. Yeah. So they refuse totally. Then as an auditor, you know, that is really a fundamental thing that is affecting all the financial statements. It's a pervasive concept there. Material and pervasive, because you see, all the figures will be wrong. Yeah, so this is so huge. So if that is the case, then I will issue what we call an adverse opinion. Adverse opinion. Now listen, if the directors are able to see they have a problem and they have been able to prepare these books on a breakup basis, then very, very fast, ladies and gentlemen, we shall be able to give an qualified opinion. But now remember, as you do that, we are saying that you must introduce a new paragraph talking about material uncertainty relating to going concern. And remember, you can only do that if there is adequate disclosure as well, because you must say, I draw your attention to note number 9, given to you by your directors. The company has severe cash challenges and its going concern is in doubt. Ladies and gentlemen, we have another additional note here. So we have emphasis of matter paragraph, EOM paragraph. So EOM paragraph, it draws attention to a matter already properly disclosed in the financial statements. Ladies and gentlemen, remember, naturally, according to McGregor theory X, human beings are naturally lazy. Actually, you're the only ones who are not lazy. That's why you are studying over lunch hour. But generally, human beings are naturally lazy. Give them annual reports of 300 pages. Very few of them will go through those annual reports. They're bulky. But most of them, before they make investment decisions, they'll always go and read the auditor's report. So in the auditor's report, it will be very, very important. You have to pick up some matters from the financial statements given by the directors. So assuming in this case here, there is somebody, some employee, senior level management employee, perhaps a CEO who has been sacked, who has taken this XYZ company to court. And from your experience and even from the advice you are getting in this case here from the legal department, there are high chances that that CEO could easily do what here, could easily win. But remember, the chances are still very remote. So if they are very, very remote, what are we told in this case here? If those chances are very, very remote, below 50%, we say that that is probable. Not possible. Probable is more than 50%. It's possible. So then what the directors are supposed to do is to come and disclose in the notes. Don't provide, no provisions will be done up there, but disclose in the notes that, hey, we have got this legal tussle and we don't know how it will go, but just be aware we have got that legal tussle. We've been sued by our former CEO. Most of the readers of the annual reports will not be able to read that. Yeah, that has been provided perhaps in disclosure note number 11. But you see, as an auditor, if the financial statements have been prepared very well, I will go ahead and give a qualified audit opinion. Say that the financial statements of this XYZ portray a true and fair view. But because I've seen a matter of interest that I would want to bring to the attention of my readers, I must introduce what we call an EOM paragraph. It's a new paragraph. You don't mix it with the opinion paragraph. It's a new paragraph down here. So under EOM, which is emphasis of matter paragraph, I'm drawing the attention of the readers of the audit report to this fact that has been raised in note number 11 by the directors. So when I'm doing that, I'm emphasizing EOM, emphasis of matter paragraph. I'll be able to show you this from your past papers. You'll be able to like this. Then we have what we call other matter paragraph. At times, in this case here, directors, ladies and gentlemen, most of these directors, ladies and gentlemen, are not truthful. They are not truthful. Most of these directors under what we call management commentaries, where management are giving us their reports. Yeah, actually I need to just draw down the EABL's report here. Just a moment. EABL's, let me go for 2023 because I'm so sure that must be out. Even 2022 is good. Annual report for you to see how these things look like. Great. I love audit. Actually, what I normally tell my students, if you don't do audit, especially the advanced level audit, then you are not complete. This is the best paper in CPA that will be able to show you like how do we do business in matters of, for example, internal control systems, etc. So audit is really, really good. Even CASNEP making it an optional paper at this upper level, I think that is something we will need to revisit. Audit should be compulsory for everybody. As much as tax is also important, but audit should be compulsory for every student. Also, even in terms of improving your public speaking skills, especially when you're doing so many presentations, audit is really, really good. Really good, really, really good. Very good. Very good, very good, very good. So then I will be able to come here. It's part of my life and I enjoy it, yes. Very good. Best paper. So you can see like this is the annual report, integrated report, an integrated report for EABL. You can see since 1922, celebrating life. You can see they are trying to showcase their big brands here, Uganda, Tanzania, Kenya. It's a big company. Yeah, this 2022 financial reports and basically it's integrated there. They're integrated. So in this particular case, ladies and gentlemen, I just want to show you what we call management commentaries. So I want to look for Martin Oduor. Martin Oduor. Matt Nodur. Where are you? Management commentaries. Did I miss him at first? Because he should be at the top. All right. So you can see, ladies and gentlemen, under management commentaries, we must have the chairman of the board, in this case here, speaking. The chairman of the board has to speak. We must have the CEO speaking, and we must have the CFO, Chief Finance Officer, speaking. Yourselves will be CFOs, you have to speak. So for example, under the group chairman statement, I'm very pleased to share with you our report for fiscal year 2022, a period which saw regional economies begin to recover from the impact of COVID-19 pandemic. As you know, our two previous financial years were deeply impacted by the vagaries of the pandemic, and our focus then was to protect our people and the business. Fiscal year 22 has been a much better year. Not only have we seen a full reopening of our economies in East Africa, but we have also witnessed a resumption of our own trade. Now, so these guys will come and speak and speak. They'll talk about even their own performances. But you see, again, you should be aware, ladies and gentlemen, that when these managers are speaking, they know that the consumers of this annual report will not be able to, like now, this is like a 300-page report. They'll not even get to the figures. So normally under management commentaries, what they will do, ladies and gentlemen, is to go and start cheating you that in the period, revenue grew by 10%. But when you go to the actual financial statements, revenue actually never grew. Okay. So then as an auditor, remember an auditor, I'm being called upon to review the financial statements. But what if, for example, management commentaries, they are commenting things which are opposite, things which are not, in this case here, in agreement with the numbers? So under management commentaries, ladies and gentlemen, if they provide wrong information provided under management commentaries cannot make me issue adverse opinion, cannot make me even modify my opinion. I will go ahead, give in this case here unqualified audit opinion, but now I will be able to speak about that inconsistency under what we call other matters paragraph. Other matters paragraph. This is very, very interesting. Yeah, very interesting. Yeah. Nope, not this one. Let me just get it right. I think it's somewhere here. Great. Yeah. So you'll be able to see other matter paragraph to communicate a matter that is not presented or disclosed in the financial statements, which is relevant to the user's understanding of the audit, the auditor's responsibility, or the auditor's what-year report. So it's normally a matter not within those 5 sets of financial statements. Yeah, mostly these other matter paragraph, we normally use the other matter paragraph, ladies and gentlemen, to capture those inconsistencies in management comments. In management comments. Then we have other information paragraph, typically drawn, drawing the attention to a statement in the director's report or chairman's report, which contradicts with what is in the financial statements. Let's compare these two very well. Let's understand these two very well. Let's compare these two very well. Other matter paragraph. To communicate a matter that is not presented or disclosed in the financial statements, which is relevant to the user's understanding of the audit, the auditor's responsibilities, or the auditor's what-year report. And then we have other information paragraph, typically drawing attention to a statement in the director's report or chairman's report, which contradicts with what is in the financial statements here. All right, no worries. So the one that I was explaining is this other information what here paragraph. Now, ladies and gentlemen, there is one more which is called key audit matters. It's not here. Key audit matter paragraph. This EABL will be able to help us. Let's get here and see the auditor's report. Ui, there are very many. Great. Yeah, so we have here a report of the audit in the 129. Now that's much better. We're not even far. We are not even far. Yeah. So you can see here, PwC is their auditors, independent auditors report to their shareholders of East African Breweries PLC. We start with our opinion, report on the audit of the financial statements. Our opinion, we have audited the accompanying financial statements of East African Breweries PLC, their company, and its subsidiaries, together with the group, set on pages 134 to 200, which comprise the consolidated statement of financial position at 30th June 2022, and the consolidated statement of profit or loss, consolidated statement of comprehensive. You must tell us what you have audited. All right. In our opinion, the financial statements give a true and a fair view of the financial position of the group and the company as at this date, and of its financial performance and its cash flows for the year then ended in accordance with the IFRS. Basis for opinion, very, very important. We conducted our audit in accordance with the ISAs. Our responsibilities under those standards are further described in auditors' responsibilities for the audit of the financial statements section of our report. We are independent of the company in accordance with International Code of Ethics for Professional Accountants, etc. We believe that the audit evidence, because we formed this basis on the audit evidence we collected. Then you can see we have what we call key audit matters, KAM, very, very important in your exams. Under these key audit matters, we are looking at those risky areas. There are those areas that even if you tried your very best, those areas like hedging, IFRS 9, there are areas, ladies and gentlemen, that are quite risky, which in this case will be areas of concern to you. Key audit matters are those matters in our professional judgment were of most significance in our audit of the consolidated financial statements of the current period. These matters were addressed in the context of our audit of the consolidated financial statements as a whole, and informing our opinion thereon, and we do not provide a separate opinion on these matters. We are simply highlighting them. Remember when they were changing this ISA, they brought these key audit matters basically to safeguard you as an auditor. Because you'll come and list so many matters, say that they are key. They are key. So you can see like now key audit matters here, carrying value of intangible assets, goodwill, and the brands, and investment in subsidiaries. So in this case here, come and discuss this, how our audit addressed the key audit matter, what we did. And you'll be able to say so many things so that in the future, when, for example, in this case here, there is a big discrepancy, people will not be able to put you under a lot of pressure. You can see provisions, all those things of judgment, all those things of judgment. Then we have, in this case here, other information. The other information comprises of the corporate information, the director's report, the director's remuneration report, the statement of director's responsibilities, and the principal shareholder and the share distribution information, which you obtained prior to the date of this auditor's report, and the rest of the other information in 2022 integrated report and the financial statements, which are expected to be made available to us after that date, but does not include financial statements. In connection with our audit of the financial statements, our responsibility is to read the other information identified above, and doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit, or otherwise appears to be materially misstated. Yeah, so you come here, when we read the rest of the other information in the 2022 integrated report and the financial statements, and we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. So responsibilities of the directors, I'm so sure you guys are quite good with this. All right. So then, ladies and gentlemen, have you gotten some clear, it can't be like 100%, but have you gotten some bigger insights now regarding this auditor's report? If you're called upon to discuss them from this particular talk, have you been able to gather something that can really be of help to you in an exam? Thank you. So then, with your permission, I will be able to look at two key questions because we have the time. We have the time. I would want to look at, we start with this one. Great, great. So come here, ladies and gentlemen, we look at this question. Your examiner gets their questions from this book of mine. I'll be able to share this book to the students who are in the paid groups of AAA and the paid group of AAA. So I can't attach it here because they're ninjas here who haven't paid us fees. Yeah, remember we are also in business. I have a big team of over 70 employees that are looking up on me to be paid. So course score. So required, on the basis of the information provided above, describe the auditor's report that you consider is likely to be issued in the case of course score, giving reasons. Explain the difficulties that would be faced by course score and its auditors if course score's audit report made reference to going concern issues. There will be lots of difficulties, ladies and gentlemen. As an auditor, be an auditor who is looking at resolutions. Be an auditor who is for resolving issues. Let people do their things correctly. Don't go and sit somewhere at night without involving people and then you come up with a report. No. So let me read this question pretty fast. Coruscore is a large telecommunications company that is listed on a stock exchange. It is highly geared because, like many such companies, it borrowed a large sum to pay for a license to operate a mobile phone network with technology that has not proved popular. The company's share price has dropped by 50% during the last 3 years, and there have been several changes of senior management during that period. They're basically talking about a firm that is quite similar to Safaricom. We know that Safaricom has been able to cross borders here. Now it is in Ethiopia. Ethiopia is a highly populous country, a country with over 100 million. Should they succeed, then the share price will be able to go very high. But if you look at Safaricom, since they went there like 3 years, what is happening in that market? Very low penetration levels. And then they're injecting lots of investments. Actually, this is one of the reasons why Safaricom share price is really coming down. Yeah, the company's share price has dropped by 50% during the last 3 years. And there have been several significant changes of senior management, just like Safaricom. Yeah, there are senior management changes over there. There has been considerable speculation in the press over the last 6 months about whether the company can survive without being taken over by a rival. There have been 3 approaches made to the company by other companies regarding a possible takeover, but all have failed, mainly because the bidders pulled out of the deal as a result of the drop in the share prices generally. The company has net assets, so it is not at a net liability position. Total assets are more than the liabilities. So the company still, despite having so many challenges, it has net assets, but has found it necessary to severely curtail its capital investment program. Some commentators consider this to be fundamental to the future growth of the business. Others consider that the existing business is fundamentally sound. It has also been necessary for the company to restructure its finances. So the company is restructuring its finances. Detailed disclosures of all these matters have always been made in the financial statements. So they are adequate disclosures. No reference has been made to the going concern status of the company in a previous auditor's report. Previous auditors' reports, nothing to do with going concern. And the deterioration in circumstances in the current year is no worse than it has been in the previous years. Ladies and gentlemen, this question, very, very few students can get it right. That one I can even bet, even 2,000 shillings. On the basis of the information provided above, describe what is the auditor's report that you will consider likely to be issued in the case of a horoscope, giving reasons. So in this case here, you assume you are the auditor, then advise me, are you going to give a qualified opinion? Are you going to give a qualified opinion? What kind of a report are you going to provide my students here? Yes, Elisha will be able to share. Oh, there is a ninja saying like me, I believe this ninja will be able to pay today. This ninja should be able to pay today. This ninja should be able to pay today. Weedy says unmodified. HP says except for. Qualified expert except for. Chepkorir Catherine unmodified. How about the other ninjas who are not telling me anything? How about the other ninjas who are not telling me anything? Everybody must mention something. If you want me to help you, everybody must say something. And this time is running very fast. And there are so many things to teach them. Linda, yeah, yeah. So then I've been able to open this answer here, ladies and gentlemen. You'll be surprised. Don't be so quick to give bad audit opinions. I'm not training you here to start going out there dispensing bad audit opinions. Anyhow, no, no, Gaba Agnes, you can't give an except for here. Yeah. Modified and other matters. Let's see. Modified and other matters. Let's see. Let's see who is correct. Let's see who is correct. I mean, these guys have done proper disclosures, adequate disclosures. Yeah, you can see top tips. This question considers the issue of going concern and the potential impact on the audit report. This is primarily a technical question, so the key will be to use knowledge of ISA 570. You do not need to adopt a thorough approach. So for example, in part B, you need to consider all possible scenarios where going concern might be called into question. Easy marks. These are fairly straightforward questions, being purely knowledge-based without an applied scenario, but you do need to give a reasonably detailed answers to score well. Examiner's part B was not well answered. Answers were too general, and a few were able to properly describe the unqualified audit opinion with a paragraph referring to the significant uncertainty. All right. External auditors' responsibilities and the work that the auditor should perform. Am I reading the correct question? Oh, no, I'm reading a wrong question. I'm reading a wrong question. I'm reading a wrong answer. This was about core score. Control find. Where is core score here now? Where is core score here? Yeah, core score is here. So report issued to core score. Although the company is obviously experiencing difficult circumstances, the evidence provided does not suggest that the business will cease to trade in the future. These guys have even done restructuring. They have seen this new program that they introduced is putting them into trouble. They have stopped doing further investments. All right. The company has net assets, as I told you earlier on, as I was reading this. It has net assets. When it has net assets, it means, to get net assets, you take total assets minus total liabilities. So whenever your assets are up there, you get positive net assets. And it still appears to have options available to it in order to resolve its problems. The fact that the company has taken steps to restructure its finance and has been able to do so is also a positive sign. On the basis that the situation is even no worse than previous years and that no reference has been made to going concern in the past, it would not seem appropriate to even refer to it this year despite them mentioning up there that there are a few issues. But you see, those issues have been resolved. An auditor's report with a modified audit opinion would be issued. Let me just read these top tips. The question considers the issue of going concern and the potential impact. For part A, do not jump to conclusions, but make sure you read all the information and weigh it up. Also remember that modified opinions are issued relatively infrequently. Try to get a solution. In part B, you need to think as practically as possible. Notice that you are asked to consider the difficulties which would be faced by both the company and the auditors. So remember part B, if you are to give a bad audit opinion, then what are the problems in this case here to the company? Once in this case here, a bad audit opinion has been given to the company will really get injured with its stakeholders. Suppliers in this case here will no longer be able to give goods on credit. Some suppliers actually will demand to be paid in cash. Which customer? Look at this other day when we had in this case here Chase Bank getting a bad audit opinion. There was a stampede, people running to the bank to withdraw. There was a customer overrun. So even customers would not want to deal with a company that has been mentioned negatively by auditors. All right. So customers will be running away. You can't get the very best employees. Your old employees will start resigning. There will be, I mean, when you get a bad audit opinion, that will be the last nail on the company's coffin. That company is going down there. It's going down there. So then if you read the question very well for part B, I only have 3 minutes. So for part B, ladies and gentlemen, this one here. So part B, explain the difficulties that would be faced by CORSCO and its auditors if CORSCO's audit report made reference to going concern water issues. Basically, if they gave them a bad audit opinion. Banks cannot give them money. I mean, there's so many. Let me just read this because of the interest of time. So, ladies and gentlemen, what do we have here? Report issued to CORSCO. So difficulties. If the auditor report mentions going concern problem, it's likely that CORSCO will find it difficult to raise finance from banks or investors. It is often said that it becomes a self-fulfilling prophecy, although this should not dissuade the auditor from modifying the audit opinion if the auditor feels that there is a genuine need. In addition, customers and suppliers may notice the reference in the auditor's report and subsequently be more cautious in doing business with CORSCO. This is likely to further worsen the position and liquidity of the business. For example, CORSCO suppliers may decrease the number of days credit they allow CORSCO or their credit limit. The relationship between the auditor and the management of CORSCO could now the effect to the auditor. So the relationship between the auditor and the management of CORSCO could become very strained, particularly where the management of CORSCO genuinely believes that no reference is required. This is particularly difficult as the matter is essentially one of judgment and will rarely be a clear cut. In extreme circumstances, the auditors may lose the audit and the fees from associated work. In this particular case, as there has been no reference to going concern in the past, referring to it this year would imply that the situation has deteriorated further or that previous reports were not correct. This is particularly a contentious issue as there is an ongoing public concern about the role of the auditor in warning shareholders about matters which affect the value of their investment. Ladies and gentlemen, if you look at this question, I'm 100% sure. If you guys were to be honest with me, I wanted even to do a survey. This is a question, especially part A, where 80% of you would have failed. But now the good thing is that the moment I do this, like 4 questions on going concern, you will become so good at this. You will become so good at this. So ladies and gentlemen, I want to take this opportunity, in this case here, to advertise our public speaking classes, which will be starting this weekend. Do you believe that as accountants, you need to be good public speakers? Yeah, it is the biggest gift you can ever give yourself. So you're starting these public speaking classes. We shall be charging 5,000 shillings every 3 months, 5,000 shillings. It will be a whole year's project. Somebody will say a whole year is too much. No. Actually, if you ask me, public speaking should be something that should be learned continuously. Myself, I've been attending public speaking classes and I know, ladies and gentlemen, that I can even feel, even myself. I mean, I'm not the very best, but I mean, I'm too comfortable as I speak. All right. Because we know, I mean, you'll be told, like tone of variation. Like in this case, you know, when you are speaking, people should be able to feel your authority. So I'm so sure when I'm speaking from here, you guys are able to say for sure that Dr. Aura is authoritative. It's because of the class that I'm attending. Yeah. I was not promoted because of that. Yes. Chief Ninja, yes. Yeah, we need to. Yeah, this video, actually, this is going to YouTube. This will be on YouTube. So you need to search for me, Joshua Aura. Yeah, Joshua Aura on YouTube, the one that has about 70,000 followers. 70,000 followers. So these public speaking classes, you will see ourselves posting quite a lot about public speaking classes. Please ensure that you join. And you're fusing it with songs, singing. We are fusing it with what we call karaoke. So we shall be displaying things here at times you sing along. Yeah, good songs. We are going to bring in mock interviews. Mock interviews shall be bringing in like 4 people. Interviewees, yeah, in quotes. And then we have very serious interviewers from this end. And then, of course, we ask them great questions. In that case here, we shall be able to do what here? Yes. Thank you so much. Thank you so much. So we shall overcome. Yeah, you can join anytime. You can join anytime. You can join anytime, but I would want to have it's just 1 hour every Saturday, 1 hour, or every Sunday, 1 hour like that. So shall overcome. If you're interested with that course, our number is 0793 555 000. And don't miss any low-hanging fruits class like the one we have had today. Don't miss any class. Don't miss any class. Yeah, don't miss any class. You shall go places that you've never seen before. Thank you so much. Be blessed and bye. Be blessed and bye. Thank you so much, Orpa. Thank you. Yes, we shall upload it. Yeah, we shall upload it. Thank you.